What's going on, guys? This is Aaron from Departures Capital, and we're here with John Feneck, CEO of Feneck Consulting and Portfolio Manager in the mining sector. It's a pleasure to have you back on, John. How are you doing today?
Hey, good, Aaron. Thanks for having me back.
Yes, I'm always excited to chat, and I know we'll be chatting about gold and silver, so that's one of my favorite things to chat about. Can you start by telling us what you've been up to since we last spoke? It has been an eventful time.
Yeah, sure. So I've been on the road pretty hard. Went to Beaver Creek in Colorado, went to Denver Gold. After that, did a couple of client road shows. I like to get out on the road and actually meet people myself. I enjoy that very much. And then I did the New Orleans conference with Brian London in October. And then I just got back from speaking at the Zurich Precious Metals Summit in Switzerland last week. So it's time for some R&R here coming up in the next few weeks for me.
No, definitely. Sounds like you've been really busy. So we spoke a lot about your short trade last time you were on. Can you give us some updates on that? It's been a pretty volatile, well, year, but especially these last couple months.
Yeah, so as I've mentioned before, I started in 92 and I've been investing in our sector since 2000. So over those 22 years, I've seen a lot of people come and go. David Tice is one portfolio manager that I followed pretty closely in the 0809 correction. And I thought what he was doing in terms of portfolio construction was kind of interesting in that he managed something called the Prudent Bear Fund that you guys can now find at Federated Funds. But basically, he's no longer at the helm, but he basically went long, stuff that was out of favor, like mining stocks, and he would go short stuff that was overvalued, i.e., momentum stocks. And that's what I've been doing all year. And that started January 5th when the Fed got really hawkish, right? That was before the first rate hike in the US. But look at what's happened since. They've followed through. So we've been one of the only entities out there pounding the table all year that this is going to be a rough one and that you need to prepare for higher rates. And to me, as I said on your last show, certain things will go bad when rates go up, right? The dollar has increased substantially.
Mhm.
Would I go long the dollar this year? No, because I'm a gold and silver advocate, right? Like that looks bad. So what I do instead is I short emerging markets. So EEM is the biggest ETF out there for emerging markets. We've been short that all year. I covered about 25% of that probably about 3 weeks ago, around November 4th, when we saw that rally kick
Mhm.
off. And I covered, as I said in the last show, I was short China, which is FXI, Frank X-ray Ida. I covered 90% of that around November 4th to call it November 8th or 9th because it got so good. I mean, we just made a lot of money on that. But we'll be back to that trade, right? Because what you saw November 4th was predicated on the fact that an official in China said that, oh, the COVID lockdown is going to end. And then today, literally, the news item is saying, hold on a second, we have all these COVID cases. So it's like we're back to freak out mode. So like it's you really have to be prepared to trade this market. So I guess the long and short of what I'm saying here is that we continue to be short for a portion of our money. That right now is about 13% of our portfolio. We have about 11% in cash, and the rest is invested in where we have expertise, which is in mining and energy.
No, that's great. And it's definitely been some volatile times. So, as we know, the US dollar has finally been cooling off. Gold's back above 1700 per ounce. It's been a pretty nice rally so far. A little bit of a pullback in the last couple of days. But how do you feel about the market going into 2023, especially specifically precious metals?
Yeah, I think 2023 is going to be a fantastic year for mining equities, and the metals will do quite well as well. But again, like for me, let's say gold's at 1800, right? Nice round number. If gold is at 1800 and it goes to 1900, I make 5% plus, right? Like not exciting to me.
Hmm.
If 1800, we were talking pre-show about some of your recent purchases and Newmont, AEM, those kind of names. They're going to have so much more leverage to the price of gold going up $100 at these bombed out prices. I'd much rather own NEM, AEM, BTG, some of the names that you talked about earlier as components of GDX, as opposed to owning GLD or some type of physical gold.
Yeah, exactly. I've just been targeting the stocks that are have the most leverage when it comes to, a move in the price, and definitely those miners, because they've had time to adjust to lower gold prices. So now they're nice and lean with low AISC. So what are your top picks in the market from now until the end of the year? Which companies, are you focusing on? What do you like?
Sure. So I'll, as a kind of end of year, you know, taping here, I'll go through each of the commodities and give you one or two names, right? So I'll just kind of breeze through some names, and I'm happy to answer questions for your viewers afterwards. We can throw up my um, website and contact info later. But let's start with gold and silver. So gold, on the producer side, our biggest position right now is AUMN, which is Golden Minerals. We've talked about this on your show before, probably closer to the high 20s. It's trading at 24 cents right now. It is very misunderstood in that, the company, if you were to have this interview 5 years ago, was talking almost exclusively about their El Cabar project in Argentina. And it's been really thrown under the rug over the last 2.5+ years because they did a joint venture with Barrick at that time. And, you know, it's kind of a double-edged sword. You want these JVs, these joint ventures to happen, but at the same time, is Barrick really interested in some project in Argentina when they have 35,000 other things to do? Like that's the problem, right? Like
Mhm.
the project is absolute value, but it's taken Barrick longer than the company Golden Minerals thought to come around to the table to say, hey, we're going to advance this, but we're going to give it back to you, right? So we're at that kind of critical point right now. The market is clearly trading like, it's Barrick's going to take a pass on it, but I'm not 100% sure that that's accurate. I talk to the company every month. I feel like they're doing everything they can. I know what the project is and isn't from years of working with the company, on the phone and understanding that they're in a pretty good province in Argentina. And with a partner like Barrick, what if they do keep it, right? Like there's a lot of value there. And so that's one name that we like at 24 cents that's producing currently. On the gold side that is not producing, that's USAU for us. It's a NASDAQ traded gold stock with less than 9 million shares out. One of our screens, as we've said before, is low share count, and this one definitely fits the bill. They just sold their Maggie Creek project for just under 3 million. That's going to give them a lot more cash. They already cashed up this year. So now when you look at what they have left in the portfolio, they're going to be spending a lot of time at their Keystone project next year, as well as their Copper King project in Wyoming. And the real catalyst for the company is still probably 9 to 12 months off when they get permitting done on Copper King. But once the market sees that they are going to get that permit in Wyoming, I think it's going to wake up. And by then it's probably too late, right? So we're buying that in advance. On the silver side, on the producer side, we like Silver Corp. That's SVM. It's trading at 270 right now. It's had a nice little run here from where it got bombed out in September, right? So you look at September 16th, Aaron, GDX and GDXJ rebalanced that Friday, and this got crushed on very heavy volume. And I talked to the company about it, and they just said, look, we just didn't meet that $450 million criteria for market cap. It's nothing fundamental.
Hmm.
So, with 210 million in cash, no debts, trading at a really low multiple here. I think the market really is starting to come around to the story just now. So if silver gets to, 25, 28, some of those targets we've talked about before, this is going to have a lot of torque to the silver price. Another one that has even more torque is Aftermath Silver, which is AAGFF. In Canada, it's AAG. It's trading at about 19 and a half cents US right now. It's moved up a lot since we mentioned it on your show last time, around 12 cents.
Hmm.
But I think this is just the beginning. If you look at the pandemic low, it was 6 cents US. If you look at the high in January of 2021 on the 3-year chart, it was around a buck 37. So that's a huge gap right there. And who knows where the price should be, but it's surely worth more than 19 cents in my opinion. And it's probably too high at a buck 37, right? So it's like a lot of a lot of
Hmm.
land, as they say, in between those two price points. Um, Palladium, we like Canadian Palladium, which is DCNNF. Bull is the ticker in Canada. I think it's just completely misunderstood and presents a lot of value here at under 3.5 cents US. Lead zinc, base metal play. We like Vendetta. We've talked about that on your show before. VDTAF in the US, VTT in Canada. It's probably 18 months away from production in Australia, right? So like anything that close to production will start to get a bid as it gets closer to production. But what really got us interested in that, Aaron, as we've said on your show before, is that in December of last year, they came out with a news item about a 4.7 million-ish kind of cash infusion from a Singapore-based company. And that really got my attention because the market cap is so small in the stock, right? It's like, why would this company put $5 million with Vendetta if there wasn't something real there? So I always remind clients and listeners like yours that just because, in the US, maybe zinc isn't important or cobalt isn't important, it's really important in some other parts of the world, like Asia, right? So, like, there's always going to be a buyer somewhere. So, that's why I tell people don't lose hope at these prices. Like, you need to buy more.
Mhm.
Um, Copper, I'll give you two in that space because they're just so bombed out. Copper Lake, WTCZF, is something we bought at a penny and a half about 2 years ago to the day. It's trading at 5 cents right now, but it ran up to 16 cents on good drill results. Don Hoy, they brought on board about a year and a half ago. And Don's a really experienced geologist. They're getting set to drill Marshall right now in Q1, into Q1. So I think there's going to be some really good news flow in the first half of the year from the company. The other one would be trying to think of the ticker in Canada. I can't, but it's WCUFF in the States, and that's World Copper. I just got familiar with this story over the last few months. They have two projects, one in Arizona, the other one's in Chile. The one in Chile has got a 46% IRR on it, internal rate of return, which is sick. I mean, there's nothing in the exploration company space in Chile with anything much more than a 30 or 35% IRR. So this is head and shoulders above many of the existing, projects there. But the stock's trading like it's going out of business. It's at 15 cents US as we speak. So it's like literally hit a 3-year low today. And so those are the kind of values we look for, right? You know, Escalones, the project we just talked about, has real value to someone, right? So it's like whether or not it comes today, this month, next year, I don't care. It's going to get monetized at some point. Uranium, we got interested when I worked at Sprott. I spent many hours in Rick Rule's office talking to him about uranium. As you know, he's a huge bully. He really
Yeah.
knows the space extremely well. But as I told people then and now, Rick's timeline is not what my timeline was. It's not maybe what your timeline is. It's like he has patience. He can wait 5 to 7 years. I'm looking for something within 6 to 12 months. And so uranium to me was less interesting until recently when all these governments started to get more interested, right? You're starting to see the news flow in Japan and the US. It's
Mhm.
like this is when you buy some uranium juniors. So Forum Energy Metals to me at 8 cents US right now is going to have a really good 2023. They have two major areas in Wollaston, which is in the Athabasca, and then also in Nunavut, they've got some claims they got from Cameco, CCJ, back on the February 1 news item. And that to me was like when I got super interested because they bought these claims for 165,000 Canadian, and Cameco is estimated to have put 75 to 80 million Canadian into those targets. So when you can pick up something that
Mhm.
cheap, it's like unbelievable, right? So a lot of upside there in Forum. And lastly, I'll give you two kind of categories we haven't talked about before, which is project generator and royalties. So for project generators, we like this company called Transition Metals. It's TNTMF in the US and XTM in Canada. I've known Scott McLean, the CEO, for a couple of years. He won a geologist award back in, I think it was 2004, for a project in the PGM space. But they work very hard. They've got interesting projects across a number of different types of metals: nickel, silver, palladium. So I think there's a lot of diversification there, is the way I would put it, right? So when I look at their portfolio of projects and actually what stocks they own interest in, and add that up, I mean, it's trading at about a third of its book value right now. Lastly, on the royalty side is Vox Royalties, which is VOXR. It just got upgraded since we last spoke on the NASDAQ.
Mhm.
So, really big day. It went from, gosh, 270 up to $5 on the first day that started trading. It's back down to 252 right now. So it's literally round tripped all of that gain. And I think it's worth a lot more than current prices. They've got some producing assets. And as you probably saw, Aaron, Mavericks just did a deal with Triple Flag here that was pretty accretive to them. So I think there's going to be more deals like that next year.
Yeah, Vox is great. We've covered them actually for a
Okay.
long time. So Kyle's a great CEO and he really gets it done. So yeah, thanks for those picks. Definitely be keeping an eye on those. You've been actively trading, along with short in the market for over 20 years. How did you get started? What have you learned over the years for our viewers or people who are potentially interested in navigating these markets?
Yeah, sure. So back in 2000, I had the luxury of working with a great financial advisor at Merrill. And he was just really different in that he would just always tell me like it was. And I came to him in 2000 with a tech portfolio and I said, hey, I'm getting really nervous here. And he's like, hey, you should be because it's going to be a tough market, right? And that's kind of how I feel right now. It's like the average investor doesn't see how tough it's going to be for the next maybe 2 years out, and I
Mm,
do because I've lived it. And so his suggestion to me was go learn about gold and silver as a hedge and go learn about shorting things. What don't you like right now? And I said, well, I don't like this airline over here. I don't like this retailer over here. And those are my two first shorts. And I made a lot of money on both of those. But it took me a while to make that money. If you
mm,
look at like if you look at the big shorts, Burry, right? He was wrong for months before he was right.
mhm,
So sometimes it takes you a while for your thesis to play out. But what I would recommend to your listeners is, contact someone like myself, contact someone else that has a track record in shorting or going along the market and doing well, right? I mean, our numbers are posted on our website on our mining stuff. I don't have a portfolio specifically on long short, but I've been in the short space for 22 years and I understand the risks there better than most. Just think about it this way: what don't you like? And bet against it. Like that's not
mm.
un-American. It's not. It's un-American to make money off of stuff that's fake for like 12 and a half to 13 years here. That's been predicated by the Fed continuing to keep rates low, right? And now that they're doing the opposite, you need to be worried. It's like the market is going to shift gears next year and you have to be positioned properly.
No, definitely. So, I always like to ask you this. Do you have any advice for our younger viewers how to navigate these tough market conditions?
Yeah. So buy in small increments until you get comfortable, right? There's no rush at anything here. I usually set two orders on everything for myself, one that's closer to the action, meaning the bid ask, and one that's my dream fill. I just did this on Palladium today. The ticker is
Mhm,
PALL, right? So I wanted to get filled, so I bought something right away, but then I had something 5% away from that action and almost got filled, but it's still out there for tomorrow. So I'll see if I get filled on it tomorrow, right? But like the idea is don't put all your eggs in one basket in one trade. You have to buy over and over again when you have conviction in something. So let's use Aftermath as an example of that again, right? When I started my Aftermath position, it was in the 50s US. Okay.
mhm,
Totally wrong. It's trading at 20 cents right now. So I've lost 60% if I'm at 50 to 20, right? But the difference is I bought on your show last time at 12. I bought some more at 20. I mean, my blended cost now is probably 28. So at 20 cents, I'm not really feeling much pain. I
mhm,
can weather the storm because as I talked about, the high in January of 21 was at $1.37. So what if we don't get to $1.37? Who cares? My cost is in the 20s, right? So like
mhm.
if we get to 40s, I'm going to make a lot of money.
No, exactly. That's some great advice, and I always appreciate that. So it's been a pleasure to have you on, John, and best of
Thank
luck
you.
navigating these tough times, and we'll have to have you back on soon.
Thanks, Aaron. Yeah, and if anyone wants to reach out to me via the website, we just redid that since our last meeting. So there's information there about the newsletter that we offer in commodities that wasn't there before.
If you like these videos, kindly hit that subscribe button and the bell for notifications. Drop us a comment down below. We'd love to hear from you. And finally, always remember, Departures Capital is for information, education, and entertainment purposes only. Don't buy or sell a stock because you heard it on here. Buy or sell a stock because you've done your research, you've done your thorough due diligence, and you're making your own personal investment decisions for yourself. This video is not financial advice. Furthermore, this video may or may not have been sponsored by the companies that we've profiled within this video, and we may or may not own shares of any of the profiled companies in this video. If you want to know the full disclosure details, check the description down below along with thoroughly reading our disclaimer. Thanks so much for watching, guys, and I look forward to seeing you in our next video.